Okay, so thank you so much, guys, for being here. This is my first time in Taxsutra. I love the forum and I love the concept as well. And what I want to talk to you about today, really, is about digital tax reporting. Right? So we've heard a lot about tax today, not so much about technology. So I'm kind of hope I'm going to bring that spin into it. And I'll talk about what governments are doing. I even touched slightly quickly on blockchain, and then talk about what this means for you as taxpayers as well, because that's what it's all about at the end of the day. But first, let's kind of have a look at the very big technology trends that are happening right now around the world. So unless you've lived in a cave for the past 10 years, you've heard about the cloud. Yes? Yes? Good. I'm glad you say that. So, and this is a trend that is not going away, right? So I don't know about India, but if you are an SAP client in the GCC, you've been told you have 5 years to move to the cloud. After that, you've been switched off. Yeah? So that trend is not going away by any means. The second and third one are we are going from a multi-vendor, multi-solution, multi-softwares, which is impossible to maintain and very costly, to trying to consolidate that to one platform, or as much as possible. So trying to source multiple products from the same vendor. Why? Because you can get a better price, like everything else. And finally, trying to use AI, which today is a big buzzword, which I absolutely hate. And this is not about talking and walking robots that are going to replace humans. It's just about us humans being made better with the use of the latest technology and trying to remove some of the mundane tasks from us. So there is a lot happening today when it comes to tax authorities and technology. And we shall touch upon this morning. Around the world, there is a trend where everything is going online. And governments are trying to get closer and closer to your raw accounting data as a taxpayer. So I've got a few examples there, because there is so many. But if I just pick a couple of them. So in Spain, you've got something called SII, Immediate Information Sharing, which is free because obviously it's in Spanish. But that's what it means. And this is basically every 4 days, you have to send every single invoice you've produced as a business to the government. And they have to approve it. If not, you cannot claim any ITC on it. Yeah? Every 4 days. Now, I'd love to see, if you were to look at your systems today, how long it would take you to produce that type of data. Huh? The other one is Poland. So Poland, they have done something which is in line with what we call the SAFT, so Standard Audit File for Tax. This is basically extra information that they ask on top of your VAT return. And this is customer, supplier list, invoices, GL data, everything. They've come to a point where they actually don't need you to file a VAT return anymore. They can do it on your behalf. Yeah? So just think about that. The government is doing your VAT return or GST return on your behalf. And then they just send you the bill. Thank you very much. Yeah? And finally, India. See, much closer to home. Right? And everything that we've seen from GSTN so far is kind of really going towards that same trend. Bringing everything online with the new regime, with all the new APIs coming up, and with e-invoicing coming from 2020 onwards as well. Yeah? So, and as I was saying, this is really about getting closer and closer to your raw transactional data, but also getting more data from you more often. Right? So, kind of started, I want to audit you, give me some data on an ad hoc basis. And then it's, actually, I quite like that. You're going to give that to me every year, every month, every day, and sometimes it's real time. You go to Turkey, You cannot send a B2B invoice without the seal from the government, real time. That's what it is. Yeah? And at the same time, they are getting smarter and smarter on how they're going to use that. So these are kind of, the 5 stages on how tax authority are kind of evolving through that technology journey, right? So it starts from bringing your paper filing online, right? That's the first step. Then it starts from, okay, thank you for that. Now I want to ask you more data. That's the SAFT model. That's the e-accounting stage. E-match is when they say, okay, so I've got GST. I'm going to match you with corporation tax, transfer pricing, withholding tax, and try to kind of see that 360 view of a taxpayer as a tax authority. And then you go to e-audit and e-assess. So there seems to be a big buzz at the moment in India on the e-assess and the faceless audit at the moment, right? So that's obviously what they are trying towards to. And the whole idea around that is I actually don't need to come physically to your place to audit you because I've got all the data that I ever need at my fingertips. Yeah? So, and that's, again, a trend that is not stopping. So if, back in the days, tax professional never wanted to hear about technology. No, that's not my job, right? Deal with the IT guys. We are now in a world where actually you do not have a choice anymore. If you don't deal with technology, you are a dying breed, my friends. That's the way it is, unfortunately. So just to kind of put some pictures around that, right? You see, I truly believe we are visual animals. Right? I like to have a picture instead of 1,000 words. So this is an example in the Middle East on how government is looking at their taxpayers when it comes to VAT, which was very recently introduced. Right? So on the left-hand side, I can see, okay, who are my top 10 taxpayers or top 100 taxpayers? Why? Because it's the 80-20 rule. 20% of my taxpayers are going to give me 80% of my revenue. It's always the same, right? And at the top, you've got how much audit I have going on. Why? Because this is spending money for me. And you see, I've got limited resources as a tax authority. So I want to know that my buck is going to be well spent. And the time that these auditors are going to go there, they're going to bring me something back. And finally, the risk profile. You see, exactly as the bank will do a risk profile on you on how much money they're going to lend you, tax authorities are making a risk profile on how risky you are as a taxpayer. And they have several metrics on that. And the more risky you are, the more likely you're going to get an audit. Yeah? So if you look, if I draw back to the Middle East, one, if you wanted to have an audit by the tax authority, ask for a refund. Instantly, you get an audit. Instantly, right? Because governments don't like to give money back. Yeah, that's just the way it is. And then I can actually drill down into any taxpayer and see that particular view, right? How much indirect tax have they given me over a period of months? Can I see any anomaly in there? If yes, that's a red flag for me. I have to look what's happening. Maybe I need to ask more data, right? And again, how much audit do I have pending? Right? Because the big thing at the moment is how can I choose who am I going to audit? Having data is key, right? For you as corporates and for them as governments as well. And there was a lot of talks about transfer pricing and BAPS. Well, obviously, the big thing about BAPS, as far as a techie guy is concerned, is action point 13, country-by-country reporting. Why? Because that is a big data gathering exercise. You have to gather data from all your system and put them into a nice table, right? Well, tax authorities want to have a look at that because then they can actually compare you between your peers in your industries, between your peers in different countries, and see if you've been good taxpayers or not, right? So some of the key metrics here on that risk profile would be my total employee compared to my total revenue, right? So if I make $3 billion in India and I have 3 employees, either I have really efficient employee or something is going on. Right? So, and that's what they're looking at as well. So now, one of the things as well that is happening at the moment is blockchain. So I've been told by my team to keep it short and sweet, so I don't bore you to death and you don't want to kill yourself after that, so I'll try my best, I promise. So, but blockchain is mainly, when it comes to tax, is mainly applied to indirect tax today. Why? Because it's a transactional tax, which has a lot of work on the taxpayer side and brings a lot of revenue on the government side. Right? And the big driver behind every single initiative today by governments is trying to tackle fraud, increase the revenue collection and tackle fraud. So if you look at Europe, about 1/3 of the VAT gap is due to fraud. That's 50 billion euros a year that's gone out missing due to fraud. That's a lot of money and a lot of revenue. And one of the ways, which I don't know if anybody ever heard of the missing trader fraud. Yes? Maybe? One? Only one. Well done you then. Well done. 2. Yeah, here we go. There we go. Okay. So missing trader is very simple in Europe. I import loads of goods into a particular country. I pay 0 VAT. I sell it at 20% of plus VAT rate, collect the VAT, and I run away. Thank you very much. See you later. And I jump to the next country and do it again. Right? And then I'm basically denying VAT revenue from every single country that I'm doing that. And that amounts to a lot of fraud at the end of the day. So one of the ways that governments are trying to tackle fraud is with split payment. Anybody heard about split payment before? One? Same man? Well done. Well done. Only one? Okay. So split payment is all about, again, tackling fraud, right? So as I receive a payment from one of my clients, that payment is split into 2. The net amount goes into my bank account. Happy days. The VAT amount goes into an escrow account, which is owned by the tax authority. So the VAT or GST never even hit your bank account in the first place. You actually never collect it. End of the month, you're allowed to net off your input on it, and then taxman comes, thank you very much. See you next month. Yeah? That's one way they are tackling fraud today. And the other way is blockchain. So I'll just take 2 very simple examples that we've done. So the first one is with IBM and South Africa. So IBM in 2016 said, okay, we have this crazy idea. We want to file a VAT return on a blockchain with the government in South Africa. How do we go about it? So they've sold their blockchain technology to the South African government, okay? And the way they would do it is every month they upload all their invoices on a blockchain, so owned by the government. Every single invoice is a record there, which no one can ever touch anymore. That's the beauty of blockchain, okay? And then they had to build a compliance tool on the blockchain to be able to do their VAT return. That's where we came into the picture and helped IBM to achieve that. So, and they did actually file these VAT return via blockchain. The issue is, it's really expensive to actually do that, 1. 2, the main benefit is for the government. They are very happy. They're getting all the data they will ever need, and everything is there forever. No one can touch it. The only benefit from IBM was a reduce in tax audit, right? Because you already have all the data, leave me alone, right? Just go and look at the data. That's one example. And the other one is Fatcoin. Again, I'm not sure if everybody ever heard about that, but that's a startup that we've invested in as TR in Europe. And what they are doing is something a bit different, right? So imagine I'm the government. At the beginning of every month, I'll give you tokens as my taxpayers, V80 tokens, right? 50 each. As you transact between each other, the VAT amount is paid with these tokens, right? I'll sell you a bottle of water. There is 5 worth of VAT. I give you 5 coins. Yeah? Simple. End of the month, everybody gives back their tokens to the government, and then it's just a math formula. You had 50 at the beginning of the month. Now you have 40. You owe me 10 worth of VAT. You had 50. Now you have 60. I owe you 10 of VAT. The beauty of that is no need for a VAT return anymore, which is what everybody wants to get to. Why? Because if I let you do a VAT return means I'll let you the chance to fiddle with the data. This way, you can't fiddle with it with anything at all. Right? This is also based on the triple accounting entry, which I won't go through now. If you have questions, you can always come to me afterwards. I'll be more than happy to explain you to that. Okay? So the whole point is governments, whether or not you like it, whether or not you want to believe it, are on that technology journey. Okay? Now your whole game as a taxpayer is to catch up with them and actually be in front of them. Because if you are in a position where a taxman is more advanced than you when it comes to technology, you are in a very weak position, okay, when it comes to an audit, especially. Right? It's like you bringing a knife to a gunfight. It's not going to go down well. Okay? So then, what does this mean for you as a corporate? How do you go about it? How do you get ready? Well, the first thing is you have to understand what's your cost today. What's your true compliance cost today? So orange boxes there are or should be your usual suspects, right? The people cost, the system cost, the technical crediting, when you spend time on an audit, so on and so forth, right? That should be fairly easy for you guys to know. What typically is not there is what we call the shadow tax function. Those costs that are still there, but that you never include when you try to work out what's your true compliance cost. Things like how much time does your IT team spend trying to give you data or reports or requests? How much time do you spend just having to maintain and keep up to date with the new regulation? How much time do you spend in Excel having to manipulate data? Right? So all of that actually is your true compliance cost, not just what is on the surface, right? And this is why the first step when you want to work out what to do is to, because you see, with tax, the big issue is the following. You are the biggest consumer of data, but you own none of it. Tax doesn't own any data. You have to ask data to everybody. That's your big issue, always, right? So for you to be able to make a business case, and your CFO, if you're the CFO, you want to show an ROI. The ROI can only be shown if you know your true cost in the first place, and what can actually tackle when it comes to technology. And actually, when it comes to tax technology, there are 3 things that are key, the 3 pillars, as we call them. One is data, right? So everything comes back to data. When people try to automate the very end of the process, which is compliance, you are wasting your time, frankly, because that compliance process is based upon how good your data is in the first place. If you have rubbish data, garbage in, garbage out. As simple as that. And you're going to spend as much time with the best compliance system in the world trying to work that out. Control as well. Who is doing what? Have you filed and paid on time? Do you have a central place for all your compliance documentation? It's easy for you to find. This is really important as well. That control is really important. And finally, visibility. You see, your true value as CFO or tax head is to be able to help the decision for the business, to save cost where you can, to improve your ETR where you can. You can only do that if you have the right visibility. If you spend 3 weeks out of 4, your nose in a spreadsheet trying to barely be compliant, you add no value to your business. That's not what you are paid for. So having visibility is the key here. And when you look at what sort of hotspot or automation you can look at, these are the most common one that we see. Okay? So transfer pricing, transactional tax, which is obviously indirect tax, withholding, excise tax, direct tax, customs. Then here, it seems there is a whole business just around reconciliation because of GST. Right? So that is also a thing that we see is a big, big key market theme. And analytics, i.e. visibility. If I have to pick 3 out of them, the first one is the transactional tax, because that hits your bottom line straight away. If you cannot recover the ITC credit that you are due, it becomes an absolute cost to you, right? So that's where the value should come. And today, you've got technology that helps you do that can calculate instantly what the right amount of tax, what transaction attract which withholding tax rate, what good is subject to excise tax. That's available today, right? And if this is one of your pain points, that's something you should really look at. Custom is another one, right? So we heard a great keynote today about trade wars. How do you think countries go about doing tariff on one another? They take a bunch of HS codes and say, hey, this one, add 50% on top of it. Yeah? Just, do you know how many updates were made in the world since the beginning of this year when it comes to HS codes? So not new HS codes or one that just disappeared, updates to existing one because of new regulation, tariff, whatever. Guess a quick number. How many updates were there since the beginning? 100 plus? What? Just 100? Just 100. Okay. So, so you are a bit on the low ball. So the number is 1.8 million. Right? Since the beginning of this year, 1.8 million HS codes updates. Now, I look around and people are like, what? Really? Yes. Yes, really. And you see, the problem with that is trade is often the forgotten child when it comes to tax, right? And when you look at that, the problem that you have is if you misclassify your goods, you're not going to pay the right duties on it. So custom authority is not going to be happy with you. Because you don't pay the right custom duties, you won't pay the right amount of GST or VAT. Then taxman is not going to be happy with you, right? And then that actually becomes an extra cost to you. So there was a famous example that one of our clients in the US, they misclassify a bottle of orange juice as frozen food, right? For 2 years. They overpaid duties by $180 million. Just one HS code, frozen food. Tough luck. It wasn't frozen food. Yeah? So that simple mistake cost them $180 million. So that, again, is something you should really look at. Are you using all the free trade agreements that you can as a business? Because I can tell you, you are not, 100%. And if you are not, you are missing on cost saving. And analytics is another one of them. Because you see, the way to look at this, so the way to look at this is that entire picture should be what you aim at as a tax function. Having as little human touch point as possible, so you remove mistakes, and you give yourself time to take a step back and add value, right? And help the business to make better decisions. You should also, obviously, at the same time, try to infuse where it makes sense, please, the new buzzwords, AI, RPA, et cetera, right? But only where it makes sense, not as a, let's solve everything with RPA, which is robotic process automation, which is basically a fancy Excel macro, which has been around for 20 years, right? Let's be honest. So once you know your cost, what you want to automate, and where you want to go, you have to look at your options. Now, it is a very busy slide, which I hate, because it's a very busy world, right? And you have loads of options for every single area that you might want to automate as a tax function. And the whole idea here is, first, do not try to reinvent the wheel, because someone has done it somewhere already for sure. And always bear in mind the trends that we talked about, right? So in some of these areas, one single provider might only be able to serve you in one area for one country. Then you might have providers that can serve you for one area for multiple countries. And some of them can serve you for multiple areas in multiple countries, right? So when you make a buying decision, you have to understand how scalable is this going to be, how future-proof this is going to be, right? Because I'm sure all of you want to grow your business one way or another, right? So how are you going to do that if you have to buy a single point solution for every single country or every single area? It's impossible. It's impossible to maintain. It's very expensive as well, yeah? And all that any of this system is trying to do is that picture in the middle, right? The good old IT terms, ETL, extract, transform, and load, right? All of you have business system. You have to extract data from it one way or another. You have to work on it with logic, with rules, with content, and then you have to do a filing. That could be an external filing to a government. It could be an internal filing to another stakeholder in your business. The point is, it's all about data once again, right? Going through. And that's why, as tax, you have to work with IT hand in hand, business and finance. Because if not, you will never achieve any of that. And so, why on earth would you want to put yourself through that? Why do you actually want to do that as a business? Is to get to a picture like this. It's to get visibility. To be able to know in real time, hey, these transactions are being booked, the wrong amount of tax is there for whatever reason, on my sales or my purchase when it comes to VAT. Okay, show me to me which HS code, which SKUs, for which BU, which entity, which state, which country, right? Show it to me. Why this is happening? Right? That's where you want to spend time. Dealing with GST should be a very small part of your job as a tax person, only if managed properly. If you don't have the right data, forget about it. This is useless, completely useless, right? And it's the same for post-filing as well, right? When you look at how much VAT you've paid or GST you've paid, as a tax person, that's where you come into play. This is what you should be looking at. What's my ETR on sales and purchase for every single entity, right? Can I realign my buying and selling cycle that can actually reduce the cash flow on one particular month and save costs on our short-term funding? All of that should come into play. And you should be able to do that with the right analytics, visibility on it. And trade, once again, is the same, right? You have to know, or you can know today, how much have you imported or exported in a particular country, how much VAT, excise tax, duties, tariff you've paid per SKU. What are your brokers doing or your freight forwarders are doing on your behalf? How are they classifying? How much are they importing? Well, all of that is possible, right? Which is what the governments are doing and how you as a corporate can respond to it, because one way or another, you're going to have to. Huh? So I thank you very much for your attention and happy to take questions if there are any. That's not me. No question? I've killed you with my IT geeks. Okay, fair enough. No? Okay, cool. Thank you.